We live in a fast-paced and hectic world where it's easy to feel overwhelmed, stressed, and out of control. How do you manage all the competing pressures without losing sense of yourself? How do you stay focused enough to not only plot a path, but follow it? Welcome to Recovery Road, a show that offers inspiration, insight, and intelligence, as well as success stories from many walks of life that can show you how you can control your own destiny. Our knowledgeable and entertaining hosts and their guests give practical advice that you can use every day on your road to recovery. Now, here are your hosts, Leaha Mattinson and Greg Bird.
Hi, everyone, and welcome to today's episode of Master Your Life Recovery Road. I'm host Leaha Mattinson. First of all, let me say thank you to everybody who is joining us from wherever it is you are in this wonderful world that we live on. We're so excited to have each and every one of you coming and listening in and sharing the message that Recovery Road is really all about. I'm joined as usual by my wonderful co-host, Greg Bird. Greg, how are you today?
Amazing. Thank you, Leaha. It's awesome to be back. And we got a special guest back returning for this episode, Mr. Ben Fortier. Cousin Ben, welcome back to the show.
Glad to be here. Always happy to be a special guest, right?
Excellent. Well, we always like to kick things off with the meme of the day, and I had to pick two. There was some real good ones, some funny ones, and some real serious ones to kind of set the tone for today. So, you ready for this one, Leaha?
Always ready.
So, Ben, this actually came from another one of our advisors at PPI, Michelle White-Wolf. So this one goes out to you. Let me know if this one pertains to you, Ben. So this is good. Yesterday, my husband thought he saw a cockroach in the kitchen. He sprayed everything down and cleaned thoroughly. Today, I'm putting the cockroach in the bathroom. Jen doesn't play that game when you, does she, Ben?
No, she doesn't. She's got other tactics. But either way, we're all cleaning up, aren't we? It's good. Yeah.
Clean it up. All right. Well, thank you, Michelle. And actually, I got another one from another one of our advisors, Steph Jacobson out in Viking, Alberta and Camrose, Alberta. She deals with a lot of farmers. So she posts this beautiful picture of a green John Deere combine and the harvest. It says, "A farm is more than land and crops. It is a family's heritage and future." And I loved this one because it actually reminded me of my grandpa. He passed away at the young age of 50. And the last time I saw him was in the harvest of 1980, actually driving a green John Deere combine just like this. So, Leaha, does it bring back memories of the farm?
Yes, we were not John Deere green, folks. We were, Case White International red. But yes, definitely brings back farm memories. And I think too of the cool things that happen on a farm that are about building legacy for generation after generation, which is what we're really endeavoring to get people to think about on Recovery Road and on these episodes that we're doing with you, Ben. Ben, you had some experiences on the farm. Does that remind you of anything?
Oh, yeah. The farm was a fantastic place. And I know that, I don't believe it's in the family anymore. Is that right, Leaha?
No, it's not. It's not in the family.
But I mean, transition of a farm company to one generation to the next is of utmost importance. And it's definitely a passion business. That's for sure.
It is. And I think why we really need to do these episodes for people to be able to plan, because we say often that we're very sad that the farm isn't in the family anymore. But there's lots of disability things that you can't necessarily plan for. We're not going to be focusing in on that on this episode, but we are going to be talking about death, which is something that your family would have experienced, Greg, with your grandpa Ray passing away. And we'll dive more into disability on the next episode. So for those of you who want to tune into this series really on planned giving and then also the strategies around death, disability, and disagreement and divorce, we're going to be talking about all those very important topics.
And such uplifting, conversational materials. I mean, your listeners are just going to be loving this. Well, let me kick back with a cup of coffee on a nice Sunday morning and listen to this just uplifting stuff.
Talking about death. It's kind of what we do.
That's right. Let's plan your eventual demise. Let's talk about how life is finite. So let's do it.
Well, yes,
it's finite, and it's a big secret that people want to keep, undercover, is that that life is finite, and I think that's very not been to our advantage. In cultures prior to ours, there was a very big reverence for people's passing and aging and passing, and taking care of people when they weren't well, and then a whole tribe of people would take care of the elderly or people who were disadvantaged in any way, like disabled people. But we've really lost touch with that, and it's become so not common to talk about these real life things. Like, you're always talking about the stuff that's frivolous, and then when this real life stuff happens that kind of runs at you like Terrence the office linebacker, just knocks you right out. You can't, like you can't recover. So this is why we need to, I feel compelled to bringing this stuff to light, so that we can help people to actually have their head above water in these real life things that happen. So diving into death maybe doesn't sound like that much fun, but death by dinner is something that we practice in our family. We talked about it because we had a disability that was, something that could take people out early on. We also had cancer in our family that took people out, prior to their, what we would have liked to have been their end date. So this is just the realities of life. And we can talk about it with reverence, but also I think, with the memory of good memories of things that grandparents have left behind, but how they would have probably wanted to have done things differently also, so that they could have planned better for their family that was remaining alive. That's where you guys come in.
That's where we come in.
That's where you come in.
Nobody's getting out of this alive, right? Nobody's getting out of this alive. And, but it's funny because as a society, whenever somebody does pass away, everybody's to some degree shocked. And, but that's just the way of it. But nobody's getting out alive. So you do have to plan for it.
Mm-hmm. Yeah, true. I must say, was kind of reflecting before the episode today, just why exactly makes you so successful in this business, Ben, is that you can just put a nice spin and have these conversations where it just disarms people to actually talk about it before something really terrible happens and can really decimate a family, a business, and all of that. So how we kind of come together to talk about this, I would really love you to share some of the stories that you've had over the time, because I was trying to calculate how much insurance or solutions you've probably brought to individuals, families, businesses. And I was looking at it, it's probably upwards of $500 million to $1 billion of life insurance you've actually written, Ben, in your time. Would that be a fair estimate?
I don't know. I've not kind of kept track of it that way, but thanks for your kind words, Greg. It's been an interesting business, that's for sure. Again, like I said last time, I don't think anybody grows up, any kid goes, I want to sell life insurance for people. But, we'll dive into a few stories today about how insurance works and talk about some examples. But it is a pivotal product when you're planning your financial picture. But, it's kind of like a game of chess. You plan all your investments, and that's kind of like making your offensive moves. And then you need insurance to basically position yourself to plan your defensive moves. Because there's so many things that we can't foresee, so many potholes on the roads of life. And obviously you need to talk about those things, need to address those things. And if you have insurance in those times, that makes for an amazing time. Actually, when we were planning out this podcast a little bit, there's some talk about these items that are behind me. And I would say the most important life insurance product that I sold was certainly not the largest one by any stretch of the imagination, but it was to my father. And, at one point in my father's existence, because people might think, he's got a sword behind him, he's such a violent person. That's not actually what that's about. But my dad, at one point in his life, he got really into knights. He loved Knights of the Round Table. He loved the stories. He loved what knights stood for, standing up for what was right and that type of thing. And what he always wanted to do, I've got two brothers, and something my dad always wanted to do was knight his sons and kind of create this family legacy. So he designed a family crest, and we still use that to this day. And he created in his backyard this kind of stone circle thing with a fire pit in the center. And on his 65th birthday, he invited us all over, and he told us the story of his life and his heartbeat for this type of stuff. And we got to all kind of go down to one knee, and he got to knight each one of us. And he brought over some friends, some gentlemen that had been, important parts of our lives growing up, and they were able to say great things to us in that ceremony. And then at the end, he wrote us all a letter, which is in this frame up here. And we all got a sword engraved with the family crest. And I keep that as a reminder, because none of us knew that just a few months after that time, he would suffer a stroke and pass away. And so, a number of years before that, I had sold my parents some term insurance, and he happened to pass away during the time the term was going, and the insurance company paid out that claim, and it put my mother in a much better position than she would have been in should she not have had that coverage. So that's a personal story of how insurance has affected our lives. And how sometimes people pass away when you, to some degree, least expect it. But I am very glad that we have this as a commemorative thing, and I'm just so glad that he had the experience to do that for us. So
right, and the legacy, right, that he left behind because of the character that he has. A man. One of the things in insurance that I think is an interesting thing that happens is people will go, I don't want to get insurance, or I don't want to think about getting insurance because then that means that I'm planning for my death. You're being so morbid. However, it's like there's personal insurance, and then there's also business insurance. But if you're managing your life like you're the business manager of your life, whether you own a corporation or you run a sole proprietorship, or you just got a family quote unquote, you've just got a family to take care of.
It's the family all of a sudden.
All of a sudden, that's right. The family is the corporation. And so, but if you're not sort of taking a noble approach, which is what your father, when I think about Uncle George, there was a nobility about him, and that he wanted his children to be noble in their acts, and noble in the way that they thought, and in the way that they operated in the world. And that this ennoblement or preeminence, the idea of preeminence, is a character trait that you want to ingrain in yourself, as you are mastering your life, to have more insight, intelligence, and inspiration to live it better. And so that whole putting on the mantle of nobility and preeminence means you start looking at not only how you take care of yourself, but how you take care of the people who are who you've entrusted, or their care is entrusted to you. And then you start using planning tools differently, or thinking about them differently. So that's where, again, you guys come in to talk about. So what are some of the tools and the stories, maybe like where have people not made a good decision in terms of having things in place, and what kind of has been the outcome? Because your dad is an example of a good example, but there's examples of decimation that I think people need to consider also. Again, light fare for Sunday afternoon if you're listening to this as a podcast.
we'll tell some good stories, but we need to share some horror stories too. So do you want me to share one of the most bone-chilling ones that I think I came across in my 18 years in this business? Mm-hmm. And Ben, I know you've had some great ones and some doozies you've dealt with, but there was one in particular that really sticks out to me where there was no planning put in place, or maybe not enough planning. And this goes back to a client I had. I actually had the Calgary Drop-In Center, the most sophisticated homeless shelter I think I've ever seen. And it's one of the most riveting ones where they really help people get back and recover and rehabilitate and get back to their lives. And in that particular one, we actually helped all the staff with getting up a little savings plan. One of the members of that group shared her story with me and the other advisor I was working with. And I tell you, my heart just melted and sank. And she basically shared the story, how she ended up on the street. And lo and behold, she tells the story and goes back to the beginning where her and her husband had this magnificent company, and he had business partners and all this stuff. And along with that, actually accumulated a lot of debt. And again, they were living La Vida Loca. They had the fast cars, they had the fancy cottage, the boats, everything you can imagine. 4,000 square foot home, beautiful home, a lot of property. Anyways, what happened was he passes away and did everything. She had nothing to do with the finances, nothing to do with the insurance, nothing to do with the business. And here she was left to clean up the mess, and literally was ashes that was left. All the debts basically took over what was left of the company. The partners just kind of cut her right out. And what the saddest thing was is that within 5 short years of going from a very massive high living lifestyle, high flying lifestyle, to absolutely having nothing, where she was forced out on the street, was just appalling to me. And we've seen this, and when we deal with a lot of companies, Ben, and in businesses, in fact, the first thing we always share is do you have a buy-sell agreement? Number one. It's amazing. In your experience, Ben, how many do you feel as a percentage of businesses don't have a buy-sell agreement?
Oh, that's a great question, Greg. I would say more than half. I guess for the listeners that are tuning in, so when you have a company and that's owned by, let's say the three of us had a company, and that company was worth $3 million on the open market, then that means that we all owned it equally. So my share would be worth $1 million, Leah's share would be worth $1 million, Greg's share would be worth $1 million. What a shareholders agreement does is to say, okay, well, if something happens to one of us and if we're hit by the bus, what happens to the ownership of our shares? Do mine go to my wife, Jen? Now, does she step in and run the company on my behalf? Do Leah and Greg want to be partners with Jen? Most often that answer is no. We all got into business together for a reason, and just choosing to have a partner that's not me might not be palatable. So in exchange, the business would actually buy life insurance on all of our lives, so that if something were to happen to one of us, that the money would come into the company and there'd be money there to buy out the share of that deceased partner's estate. There's a lot of positive tax consequences to that, depending on which tax jurisdiction you're in. But the real benefit is that money is there live and now to fund that buyout. Because oftentimes, if we're all working in a business together and we're all working hard, then losing one of us would be detrimental to the health of that company. So maybe we wouldn't be able to earn enough to buy that person out of cash for a period of years. And so when you have insurance, it makes all of that just smooth and easy. If you don't have an agreement, then if you do have insurance but don't have an agreement, money comes into a company and that's just money. And when typically something I say to, but there's no guidance about where that money goes. The agreement stipulates, here's the price, here's how it's going to work, da-da-da-da-da-da. And what I always say to business owners is, you're in a great relationship today. You're in an amazing relationship today. And you think, oh, we don't need that, because if something happened, so-and-so would step up to the plate, such and such would do this. And I look at people in the eye and I say, honestly, that's the way it is today, which is amazing. However, when somebody dies, all bets are off. All bets are off, because let's say my wife, Jen, we're in this business together. She would have no idea about the company. She'd have no idea about the worth of the company. You guys would go to her and you'd say, oh, Ben's shares are worth $1 million. Would she trust you? Would she think, I'm going to have no real relationship with these people after this whole thing is done? Potentially they're giving me a value that's way lesser than what Ben would have wanted. So she's simply going to do what any prudent person would do, and that is go and hire a lawyer. And as soon as she does that, the only job of this lawyer is to get the most for Jen that he possibly can get. And that whole thing just turns into a mess. So let's say we did have it insured, $1 million comes into the business. That lawyer is going to go, okay, well, now this is not a $3 million business. You guys have an extra $1 million. Now it's a $4 million business. So you guys owe Jen 1/3 of $4 million. You're going to say, well, we bought the insurance for this purpose. We don't. And he's going to say, well, there's no agreement that says that. So it really is very important to say, while we're all still here, let's negotiate our buyout now, or let's negotiate our hypothetical buyout now. Let's all sign off on that to make sure that we avoid potential massive heartaches at some later point. And it's the same as planning out your will. If you're just an individual, you don't own a company, you should be planning that out. If you're a single owner and you have no partners and something happens to you, what happens to that business? Who runs that company? Are you leaving your family with a massive potential liability? So you should have what we call a sustainability document or sustainability plan that's funded by potentially some insurance to make sure that your company runs well in the background. But so many companies don't have an agreement, and that just turns into a bit of a mess after the fact.
Yeah. So, yeah, Jen, it's worth $6 million. Just kidding.
Jen, if you're watching, much more than $1 million. Don't accept $1 million from me.
Add a zero.
And so, add a zero. So, to point out too is that you absolutely know what you're talking about, because one of your brothers is a corporate lawyer. So it's not like you're making, I bet you guys have some interesting conversations about this sort of stuff. Interesting meaning, that you can really help each other to understand the dynamics of this at a very deep level.
Sure. And we're blessed to actually have some clients in common, which is kind of fun. But, when we're having dinner as a family and talking about, estate and business issues, it makes that conversation just riveting for everybody around that table. Just so awesome, right?
Well,
They're so
if you're
interested.
a business person, it's riveting. I know. If you want to be a
just
painter,
love business and tax details. It's just so great.
Now, speaking of painters, it's funny you just said that. I got to share one more story where, again, I just want to ask a question before I tell the story is, if you said over half the businesses out there, it doesn't matter what country you're in, what jurisdiction in, if you don't have one of these buy-sell agreements, these agreements while you're still alive, and you got business partners, go and get one, sit down, make sure it's right, make sure it's updated, make sure that even if you have one, that you take a look at it, because the second point you said is company just went from 1 million or 3 million to 6 million. Again, you gotta be reviewing this stuff, work with an advisor, work with a good lawyer to get this drafted properly. Now, Leah brings up painting. One of the funniest stories I ever could share, and I could look back and think of it as it was just like yesterday. And there was this painter, and there was two brothers, actually. They owned a painting company in the Okanagan. And I'd phoned this guy up, and he had, again, just a little bit of investments with us in our financial firm. And he says, well, you can talk to me all about this stuff, but I'm never going to buy that life insurance stuff from you. I said, oh, okay. Ben, how many times have you heard that objection written before you even got to go and meet this guy?
Oh, yeah. If you... So even if you're at a party and you're like, what do you do for a living? Oh, I work with life insurance. And then all of a sudden that person's walking away. Why are you walking away? They don't need insurance.
They don't need insurance. Well, this painter, this particular one, let's call them Mario and Luigi. So Mario, who's not buying life insurance, the body language was hilarious. And Ben, I know you've maybe had these meetings, maybe not, is you go and meet this person for the first time and they have their arms crossed. They're kind of sitting back across the table or across the desk from you. Maybe it's the kitchen table. And they're just like, this guy's going to sell me something. And you're just like, you got to drill down what's actually the issue. Well, I tell you, we get talking about what we're talking about today, about the company, and tell me about your business. And, how long have you guys had this painting company? Gosh, this painting company, when they started, was worth maybe $10,000, and it's grown to this $10 million painting company. It was quite phenomenal, like big projects. And we get to telling the story a little bit further, and I'll just fast forward a little bit. So I get to hear about, well, tell me about your partner. Tell me about your brother. And he's like, yeah, he's a great guy, Luigi. And yeah, we've been best friends and brothers for forever and business partners. I said, well, tell me a little bit more about his family. And he goes on and he just kind of choked up a little bit. He said, well, I don't talk to his wife. We don't get along. And I'm like, uh-oh, red flag. And I saw your body language there, Ben. You can get that gulp and that feeling in the back of your throat. I said, well, what does his wife do? And he goes on and says, can you guess, Ben? What did Luigi, his brother's wife, do for a living? If you can get this, I'll give you $1 million.
Was she a lawyer? Was she a lawyer?
No, but good guess. Leah, what's your guess?
I'm going to say she did the books for the company.
No, Ben, I'm going to give you one more guess. See if you can get this. No one's ever guessed it.
Was she an insurance agent?
No, but good guess.
Oh yeah, I'm just swinging for the fences here, Greg. You got me on the edge of my seat.
Swinging for the fences. She was a gambler.
I was just going to say a stripper.
Perfect.
I was going to say stripper.
She was a gambler. No, she wasn't a stripper. She was a gambler, and not a good one. So you can just imagine for a second. So I just kind of tried to paint a picture. Forget the pun, what I just said. So these guys are painters.
Yes.
I painted the picture. I said, okay, so in the absence of everything that I'm talking about, do you have agreement? Do you guys have this buy sell? And he's like, well, what's that? And we went and I told the story just like you shared. I said, okay, if your company's worth $10 million and you lost your brother today, you know who your new business partner is. And he looked at me like he'd saw a ghost, like the little ghost, like on Mario and Luigi. Like he turned as white as that little ghost that my boys love on Mario and Luigi. Anyway, and he's like, oh my God, I've never thought about that and what you just said. So he's like, so you're saying that I would have to owe her a big chunk of money? And keep in mind, she's a gambler. Mm-hmm. Yeah. So you can just see the unraveling of this. And again, fast forward the story. They did get life insurance. They made sure that they had enough to cover off the event of anything. Doesn't matter if he went first or the other one. The planning was the key there. So in this buy sell agreement, we always talk about, I say the 3 Ds. Right. The first one being this death. And that's almost the easier one to deal with, to tell you the truth. And then there's the disability, and then there's the disagreement, and sometimes a divorce that can derail a whole business. But on that death one, that was a potentially bad story that could have went really south really fast in that situation. But we put a fix to it. Ben, you had a really neat story too. And I want you to share with the viewers and the listeners today that one you said about the really young business partner. Share that story, please.
I have a few stories of clients that have died far before they should, and so I got a couple. If you want to hear two.
Yes, definitely.
So one of them was a couple of guys and brothers, and they had a really successful construction company, and they were just putting their agreement in place. We were talking through the different details of it, and I was helping them navigate a bit of that with their lawyer. And then once the agreement was in place, they decided to put life insurance in place on this thing. And these guys, they're a construction company, so they love getting quotes, get us the quotes. And they're just going for the, what's the lowest price we can get? And should we be buying this? I don't even know if we should be buying this. We're brothers, so it's family. And just like the story you told. And sure enough, they went ahead with it. And a number of years, not too many years after we put the insurance in place, I get a call from one of the brothers, and it was one of the hardest calls I've ever received. And it wasn't the call that the other brother had passed away. It was from the brother, that was dealing with most of the financial end. And he says to me, Ben, I've been diagnosed with ALS, and I've been given about a year to live. And so we started talking through how this was going to play out, and we reviewed the agreement again, and everything became of utmost importance. And sure enough, I had a couple of calls with him that year, 2-3 calls, and every call I was talking to a different person on the phone, or somebody that sounded like a different person, because that disease is horrific, and it's degrading very, very quickly. So he, though, was able to know that this life insurance was coming to the company. He was able to rest in a lot of assurance on that. And so he was able to plan out his legacy and his estate in a much more meaningful fashion. So he kind of took that as a bit of a blessing, and he decided to start legacy funds for nieces and nephews. He started, he was able to live his kind of last bit of life with some joy, because he wasn't concerned over the financial aspect, because he kind of knew what was going to happen. And sure enough, when I did get the call that he had passed away, and shout out to the insurance companies for this, we literally had that check in our hands, 7-figure sum, within about a week. A week to 10 days, we had that. I was able to hand that over to the company, and they were able to take care of all of the things that brother was doing there. They actually started a bit of a foundation as well with ALS, and we'll try and get a YouTube video link in the show notes. Extremely powerful story. But it felt good to be involved in that, and it felt months. It felt like a great thing. Another story of a company, another very young person, and he passed away again way too early. Company of a few shareholders, and he thought that he had a blood blister one day. Turns out melanoma. And within about 18 months or less, he was no longer with us. And again, the insurance of ultimate importance. And that was a company that was just putting a shareholders agreement in place as well. They had been in business for a long time, but just putting an agreement in place. And extremely glad that they had that, because we were also not in an economic environment that that construction companies and stuff like that would have been able to make these payments to families. Like if you're involved in any economic environment, if you're a business owner yourself of any sort, you know that some years are good and some years not so good. And so if you're caught in a year that is really good and you don't have insurance, sometimes you can make it through that thing. But if you're caught in a year that is not so good, or a season that is not great for your business, although it might be temporary, it might become permanent. And so for them, we were in a situation that wasn't great economically for Alberta companies, but that insurance was able to keep them afloat, pay out the family, and was a great thing for them. So to some respect, insurance companies do get a bad rap sometimes in the news and so forth, but nobody's reporting on this insurance company paid this out just exactly as it was drawn up, exactly as planned. This insurance company was doing this. Nobody ever reports on that, but it happens all the time, constantly, day after day after day. And, although they're sad things when they do occur, in my role, it's very fulfilling to deliver a check to a client and say, my sincere condolences for this, but they're glad to see you at that point, for sure.
Mm-hmm, mm-hmm. Yes. So we are the ones that are showed broadcasting from the rooftops that people do get paid. That's something that we need to actually change the story on that by giving airtime to the good work that is done by the life insurance companies, and corporate insurance. The other thing that I'm struck by is there's a stretch of time when somebody's got ALS or neurological diseases of any kind, or dying of anything. There's a stretch of time where you might not be in your right mind for making business decisions also. So there's the time where figuring out how to take yourself out of that situation or out of that milieu or environment where you're not influencing as a business owner, business decisions is much easier made when you know that you actually have something in place that is going to take care of the finances, because you don't feel, I think like a lot of entrepreneurs and business owners feel like they have to show up to work every day. I have to show up because without me, this whole thing is going to burn to the ground. And also because you believe that you're responsible for making income come in. But when you're sick, you're sick. And so having the assurance in place is very, very important. One of the other things that strikes me is how much money should a business have coming in before they have conversations about these agreements?
Truthfully, a business should have these conversations day one. You begin with the end in mind. It's kind of like scratching a lottery ticket. Once you get going in your business, you don't know if it's going to succeed or if it's going to fail. Mm-hmm. And even having something relatively simplistic in place at the beginning can save you a lot of heartache at the end. There's countless businesses that I walk into, potential clients, and their business is extremely valuable. And I say, well, do you guys have a shareholders agreement? And they say, well, we always thought about getting around to that, but we've just all been too busy building this company. Mm-hmm. And they never really plan for that, because if you're an entrepreneur out there, chances are you're extremely optimistic. And that is an amazing quality for any value-driven professional. You have to be optimistic. Mm-hmm. But as we all know, things happen. The road of life has some potholes like we talked about. And if you're in a business of a number of shareholders, the chances of something happening actually very, very high. So the more shareholders you have, the chances of something happening to one of them is very high. So you should do that day one, early on, I'd recommend.
Yeah, words of wisdom there, Ben. I love that quote. Begin with the end in mind. That was Definitely something to think about. So think of anyone listening right now. If you're in a business or you're in a family business, big or small, it doesn't matter. If you haven't had this conversation we're talking about, I encourage each and every one of you to have that conversation. Find someone to mediate the conversation, like a Ben Fortier or a trusted advisor. Get a referral to someone. Ask somebody within the family, do you work with someone that you trust, to actually put some of these conversations together, get it done. Ben, we've seen the good, we've seen the bad, and we've seen the ugly. And I tell you, the more years we work in this business, you start to see just about everything. So any other things that have anything, Ben, that comes to mind that has really just thrown you for a loop, where you just, you get in this situation, you get talking to these business owners, and then you sometimes just don't know what to say. Have you ever had that?
I would say, there's been two situations, as a matter of fact, that have happened to me throughout my career, where you're talking to a business owner about life insurance, the importance of funding an agreement, having an agreement. And, they look at you like a salesperson and they say, oh, this guy's just selling me something, life insurance, like the same story you told before, Greg. And, there's two instances that, one of this business owners said, okay, let's get together and start planning this out. Call me. I'm in a busy season. Call me this day. So, you calendar, like any good salesperson, you calendar, okay, I'll call them on this day and I'll follow up, and you take good notes and da. And then you call them and they say, oh, he's no longer with us. Mm. And I would say, well, did they retire? No, you know what? On the weekend, I had one person that was involved in a motorcycle accident. So on a Friday, we basically talked, kind of a call me next week kind of thing, or call me in a couple of weeks. Sure enough, they had passed away in the car accident. You never know. And I've had two of those. You never know what will happen. You never know the timing. We can't plan this stuff out. And because of that, it's important to act quickly. It's important to say, to not put this off, because you never know when that'll take place. But those were horrible situations, and left those businesses in horrible spots. So really actually quite important to act quickly on this.
Talk a bit more about those stories, Ben, about the situations that are left the businesses in. As we, I just think it's important to dial into the weeds a little bit on a micro level, because because if you're, I use this analogy, when I was first married, I drove a really crappy van, and my husband drove a really nice truck. And so me and the kids, I had my two kids that I already had, and then he had another 4. So me and the van load of kids are out cruising around in this crappy van. He's driving to work in his truck that's nice. Until one Sunday when we're headed to church, and he actually drove the crappy van. And I had said the van is crap for however long. And he didn't get it until he was sitting in the van, and it actually overheated with all the kids in it. And then he went, guess who had a new vehicle on Monday morning? Because you got to get in the van. So it's like, people might not want to get in the van, but you're going to be in the van eventually. So why not get in it kind of ahead of time if you can? So that's why we ask for the, getting in the weeds about these things a little bit.
Sure. Well, when you are a company and you're looking at insuring somebody as for shareholder agreement, you have to insure 3 things. You have to insure the value of the share, which we talked about in our little examples here. Mm-hmm. But you also have to insure shareholder loans. And shareholder loans is often, if we've been in business for some time, or even when we started the business, how much money did I put into this business to get it going? That could be money the business still owes me over and above my value. Throughout the years, how much money did we just all of a sudden keep in the business that was mine, that maybe I paid personal tax on, and then put it back in the company? It's for a lot of shareholders, they never really see that money. It's just kind of their accountant's like, okay, well, we had to pay you each X number of dollars, and then you put that back in the company, and here's how much taxes you all owe, and we just kind of carry on with our lives. Mm-hmm. But then that number starts to grow over time. And so when my wife hires this lawyer in this hypothetical example, now you owe the share value, plus you owe all this money over time. And then the third thing that we would insure is what we call key man value, Or what's this business going to look like without one of us? And is, let's say I'm the main salesperson. I'm the person out there doing all the sales. And then you each have a different role. Greg's the person doing all of the internal management of staff. Leaha's the person doing all of the looking ahead to find out what's new in our industry and trying to get ahead of all of those different changes and things like that. Let's say those are our different roles and something happens to me. Well, all of the projects that I had on the go, they gone. All of the sales and relationships that I had built, that people are doing business because, I'm the face of the company type thing, all of that is gone. So now you're struggling to say, okay, well, I'm managing internal staff. I'm looking ahead at different trends. Those are great things and those are necessary things. However, we don't have any revenues anymore. Our main salesperson is now gone. What's the cost to the company now to replace that role? And how long is it going to take that new person to ramp up to the level of sales that we were having before? That's a massive cost to the company. That's key, man. So if we didn't have any insurance like these companies I mentioned before, and this is what creates a horrible situation because they think, oh, well, there's enough money in the bank, we're cash flowing enough that maybe we could start making payments to this family over time. But what they don't take into account is on top of that, we owe that person a bunch of money. And the family goes, well, what are we going to do with that money? You're just going to pay it out to me right now? Well, we can't pay it out to you right now. And the cash flow we thought we had, we actually don't have because that person was such a pivotal part in, coming up with that. So that key man value, all these three things, they just compound and then the business goes under. And the family, who unfortunately was just kind of along for that ride, they go under again. Potentially there was personal guarantees signed. Maybe there was a loan in the company and that shareholder had signed personal guarantees, which means they assigned all of their personal assets to back a loan with the company. And while they were around, they're like, oh, this is going to be a sure bet for sure. And that was a sure bet and it was going really great. But then because that person passed away, the company couldn't survive. They now had this huge obligation of payments. And unfortunately, that estate's now along for that ride as well. So, again, depending on the jurisdiction and law jurisdiction that you're in. But those are things that you have to keep a very, very close eye on because there's so many risks in our lives, even getting behind a car, wheel of a car. If you're driving every day, you don't think about the massive risk you're actually taking in driving that vehicle. But if we were to take one of Greg's kids, toss him behind the wheel of that car, are we all very confident being in that car now? Not a chance. Or are your kids good drivers, Greg? I shouldn't have actually. Just
maybe my daughter.
Okay.
Maybe.
Yeah. We take Greg's youngest and we tell that person, take us to the 7-Eleven for some Slurpee and a candy. And we are just gripping that door like it's going out of style. So, when you don't know the risks you're running oftentimes in a business because you're managing them really well, because you're trained and you know exactly what you're doing, education replaces risk. But as soon as you don't know what you're doing and somebody's in there, don't know what they're doing, somebody else is there, they didn't know the risks or how to operate that thing, all of a sudden that education's out the door and the risks are in your face. And those are the things that can just take a business down, even a very successful company with high cash flows and revenues. When somebody dies, again, all bets are off. And everybody has to be able to have that protection. And honestly, it's not expensive. If you look at insurance costs for what you receive, it's just pennies on the dollar to be able to insure yourself. And that's most likely true across any area of the globe.
So my stomach is turning right now, thinking of our fictitious company. Here we got Leaha, we got myself, we got Ben as our number one sales guy. Ben's in an accident. And here's an objection I hear all the time, Ben. Have you heard this one? Oh, the bank's got our back. We could just take a loan out and pay out your family. How's that going to go for you, Leaha, if we just got our top salesman taken out and they know about our business and ourselves? How are they going to feel about loaning us money, do you think?
Oh, they're going to just feel amazing, Greg, obviously. No, another
0% rate of return or interest, I'm sure.
Yeah. I mean, being in Canada, I feel extremely blessed that our banking system is very strong. There's tons of checks and balances, but at the end of the day, we got a loan for a reason, or the bank helped us out for a reason. But if things go negative with us, and things are working out exactly as we hoped. The bank, the way they're set up is to look at your cash flows. And if your cash flows are really great, they're willing to give you money. But if your cash flows are not really great, they're not willing to give you money. It's like if you went out and bought a house personally, you have to be able to show the bank that I can afford this house that I'm buying. But if I went to the bank and said, oh, you know what? All these negative financial things have happened to me and I want to buy this house. And they're going to look at me and they're going to say, well, we're not going to give you the money for that. And it's the same in a business. You know, if you have some negative things occur and you think, and the negative rap the banks always get is they want to lend you money when you don't need it. But then when you do need it, they don't want to lend you the money. So oftentimes you do have to plan your business out working with the banks that way, but it's just the nature of the system. So you have to be able to prepare for that as well. It's a great point, Greg. Great point.
Great point. I love that. And I think too, that there's somebody there that can help if you're working with a good advisor, like yourself, Ben, and others who are doing this work. They can help you to figure out the value of your key men, those kinds of things. It's impossible. Somebody I did executive coaching and help with recruiting and massive organizations. I can tell you people are very difficult to replace, very, very difficult. So key people are very difficult, and that can cost you multi-millions of dollars. Yeah, we can go. That's a whole nother podcast. It's just like, oh man, it's a lot of money to replace good people. But that's why you want to, cover your proverbial bottom through these wonderful tools that we have at our disposal. So thank you so much, Ben, for that insight. Greg, as well, for the insight and the tools and the wisdom to get off your duff. And right after we get off this episode, I'm going to make sure that I get you guys into a ring and that we get up an agreement. No, I'm just kidding.
Well, Leah, and I'm loving all of these analogies. You got proverbial behind, you've got duff. I'm just excited for the next podcast. I don't know how many of these analogies you'll be able to come up with.
Wait till we get into the disabilities. So many.
Well, I tell you, it never ceases to amaze me, Ben, in every conversation I've had with you and we've had together, you actually make talking about dying fun. So now I know why you're so successful in what you do. You bring it down to planet Earth and you talk about it. You talk about real things, about real stories, and that really evokes emotion. And I tell you, it's so important to just reach out. And I do encourage anyone, please come by, check out the website, masteryourlife.ca. We can put you in touch with Mr. Ben Fortier, cousin Ben. Leah, should we're up on the hour here.
Yes, we better wrap it with some lyrics. And we picked the song today, Live Like You Were Dying, because when I was 40, I got my diagnosis for Huntington's disease, which is supposed to be devastating and debilitating and all that stuff. So this was one of my favorite songs, and it seemed appropriate for this episode. So Greg, without further ado, you can lyric on.
All right, Ben. So Tim McGraw, you a fan of Tim McGraw?
Oh, love Tim McGraw, right? Who doesn't?
Who doesn't?
This is a good one. We played it before the episode just to kind of set the tone, and I had goosebumps. So here we go. Live Like You Were Dying by Tim McGraw. He said, I was in my early 40s with a lot of life before me, and a moment came that stopped me on a dime. I spent most of the next days looking at the x-rays, talking about options and talking about sweet time. I asked him when it sank in that this might really be the real end. How's it hit you when you get that kind of news? Man, what'd you do? He said, I went skydiving, I went Rocky Mountain climbing, I went 2.7 seconds on a bull named Fu Manchu. And I loved deeper, and I spoke sweeter, and I gave forgiveness I'd been denying. And he said, someday I hope you get the chance to live like you were dying. He said, I was finally the husband that most of the time I wasn't, and I became a friend would like to have. And all of a sudden, going fishing wasn't such an imposition. And I went 3 times that year. I lost my dad. I finally read the good book. I took a good, long, hard look and what I'd do if I could do it all again. And then I went skydiving. I went Rocky Mountain climbing. I went 2.7 seconds on a bull named Fu Manchu. And I loved deeper and I spoke sweeter and I gave forgiveness I'd been denying. And he said, someday I hope you get the chance to live like you were dying. And you've got eternity to think about what you do with it. What could you do with it? What did I do with it? What would I do with it? Again, he says, I'd go skydiving. I went Rocky Mountain climbing. I went 2.7 seconds on a bull named Fu Manchu. And I loved deeper and I spoke sweeter. And I watched an eagle as it was flying. And he said, someday, I hope you get the chance to live like you were dying. Thank you again, Ben.
Everyone, love yourselves a little deeper. Love each other. Mind your minds. That's all for us today. Bye for now.
Thank you for being a part of our program today. Master Your Life is a presentation of Leaha Mattinson Enterprises, Inc. Join us next time on Master Your Life, helping you to discover the very best of you.